What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Without further ado, we'll jump into it, but don't forget to check out the description below where there's some links to some Discords, there's links to the merchandise shop, and there's some other ways you can support the channel. So don't forget to check that out. Right now on the Rawstocks Discord, we're running a 1 week free trial for premium membership. Premium membership is only $10. And with that, you not only get chart analysis, you get a community to hang out with, but you also get my call outs every day for Tesla. So let's jump into the charts. Right now we have the daily chart pulled up. We're using a little bit different chart than we have in the past. It's got some of the old things we were talking about. Something I want to note is that the daily volume point of control has changed. So when I look at this entire structure here, and when I only look at this structure here, both of them have consistency with the daily volume node point of control being here at 234.83, or give or take a couple pennies. But that's a lot due to the fact that we've been consolidating in the same area. We saw consolidation over here, right? We hit it, we came back. Now we're seeing consolidation in that same range. So because of the amount of time that we spent here, it has now changed the volume node point of control to being basically right where price currently is. And if you throw up your fixed range volume profile, you can see here just this structure, this wave structure here, volume node point of control. We do have some resistance to the upside. We have more of a thin volume profile that could bring us back down again to this trend line or into the fair value gap here. So a little bit thinner to the downside, more resistance to the upside. Now, once we could get maybe above 240 or higher, a possibility that we could head higher, but I want to show you guys this move down, then this move up. Volume point of control there, right? Same price as we have listed. And you can see same deal, thin volume profile all the way down to 222.50. So right now it feels like maybe it's been intentionally held at these levels. But if we drop this, we don't have much volume all the way down to 222.50. Now on the upside, we have a lot of volume to overcome before we get above, say, 270. So that's why so much resistance every time we try to come up. We're hitting these walls here. Where there's high volume. And so, again, if we were to start heading down, it could be a rapid drop down into the 220s. So we'll be watching that, but right now we are basically right on the daily volume point of control, the node that we're watching. Also, we got our trend line here. This is our bull channel. And we've been watching this trend line. We did say if it started dropping, we could see it test. And if it didn't drop rapidly, so that we would have been looking for maybe last Friday or today for it to come down and test. Now, every day we move up, we're moving a little bit higher. So now the support level is going to hold us at 229.08. Following day 230.35, right? And so as we go, that target is higher to contain price in that area. Now we do have I believe it's a 1 hour or 4 hour. We'll look at it when we drop down to the other charts, but we do have a fair value gap here that if we were to drop temporarily, break this channel, we could see us plunge down into that fair value gap, quickly rebound, and still maintain this channel as support. So it would be a little bit of a fake out. Now you see the dotted lines here from our automatic trendline indicator, and our automatic trendline indicator is showing this descending megaphone pattern that we're in. Not likely that we're going to come down and see this bottom, but we could easily, right here we broke out, false breakout, we came down. We could easily test this trend line or not and head back up and test this trend line again. Now, once we break this trend line, if we break this, then we're looking at back into this upper part of the bull channel, and then potentially a run to the unbalanced price range, the liquidity target here at 257. Right, we have a 15-minute unbalanced price range. We have an additional liquidity target at 265. And so then we'd be also looking to run a test on the channel top where we have another descending trend line down here. So we could be looking like even potentially into, middle of December 6th or 13th would be where those two lines converge. So if we did start heading higher, we'd be looking to take out some of these levels, and hit this support or the resistance line on the bull channel, potentially reject, or come down, test it, run it back up, where we see that channel resistance, the bull channel resistance, and the larger bear resistance trend line, where we could see price come up there and reject and then head back down. So we'll be watching this channel very closely. Now, if we break that channel, like I said, we come back down tomorrow, maybe Wednesday we sell off, we could easily break this channel. It'd be, that channel would be done for. We'd be still maintaining this trend line that's on the auto trend line indicator, right? And then we could come down. We even could come back and back test and then come down further. So lots of different things that we'll be watching as the daily continues to unfold and show us what's price is doing on the long term. Now, I adjusted this consolidation range for the daily chart. We used to have 3 consolidation ranges. I've adjusted it now for the daily, and so it's capturing this previous consolidation zone, and it's capturing the consolidation zone we're currently in. There has been some minor breakouts here, and here, right? But still consolidating in this range. Now we're back in this range. Oftentimes consolidation is really looking for, smart money and big money to be building their positions. Now that's still to be determined if that's going to be long or short. If you pull up the RSI, we are having our RSI pointing down, but we're still right there, right above the 50 level, right? So we could easily roll back up, and the daily chart could support a nice deep run to the upside. Now, on the other flip side, could also support a nice deep drop that could take us below the previous low of 194. So we'll be watching that, because RSI hasn't given us many clues besides the point that it's slightly facing down, but still above the 50. So it's more or less neutral on the RSI, as we see price neutralized here in a consolidation range as well. So we're just waiting for the next move. It's going to either break up or it's going to break down, and it's going to be, face ripping in one direction, no matter which way that goes. So we'll be watching that trend line very closely for a daily confirmation of the trend line to be broken. Now, when we drop to the 4-hour chart, 4-hour chart shows a little different look. On the 4-hour chart, we have RSI below the 50. We have RSI slightly pointing down, but working its way down. That could tell us that we're looking for continued downside. It doesn't have to happen, but that continued downside could just be to the trend line. Or here's where that fair value gap came in. 4-hour time frame. We know it's magnetic. We've pushed away from it. Now we might pull back down into it. That'd be in 221.71 all the way down to 216.73. That could just be a draw on liquidity that might take us higher. So we'll watch that. It doesn't mean that we're going to go lower just because we get down there. We could go lower. We could take it out. We could hit the sell side liquidity, come back down and test this support line right here, which would be down in the low 200s, potentially, depending on how quickly it got there, 205, 206, 207, right? It just depends on how quickly and with what force we get there. You see some nice 4-hour displacement candles, right? We got 4-hour displacement candles to the upside. Now we're getting to the downside, but that doesn't necessarily mean anything either, because we got displacement candles up here. We got big ones down here, a little bit of chop here. We got a big displacement and then immediately drop down. We got multiple displacements, immediately drop down. So right now we're not seeing any large candles on the 4-hour time frame. And we got on the daily chart, got a spinning top doji candle, inside day candle. That also doesn't give us a whole lot of clues with that there. But we're still watching our channel on the 4-hour time frame as well. We got our previous day high. We got our previous day low here. And we're right at volume node point of control. So on the 4-hour time frame, just like the daily, we can be watching for that trend to break. Now, anything below the 1 hour, that trend breaking, it's not necessarily a guarantee that we're going to continue down. Now, if we start getting daily candles, 1 hour, 4-hour candles closing below and continuing low, that's a pretty good sign that that trend is given up, and we're looking for our targets to the downside. But if it was just a 5-minute candle breaking, maybe even just a 15-minute candle, we could get another immediate candle back up into the channel and continue from there. So lots of different ways to look at this. We also have this sell-off, and this appears that it could just be, a really big pennant or, flag type of thing after a correction, right? And in that case, we'd be looking for a bearish move that might take us down even further. But we have a lot of different resistant levels or support levels that are going to, prevent price from getting there. So we'll have to see. We got liquidity, fair value gap, liquidity, deeper liquidity, right? This is all internal. We got our external liquidity down here. We can throw that on the chart, our swing point. So we'd have to break through all that, break through this the support line, break through this, right? but we're still tracking this golden zone as being somewhere where we're interested in seeing price go to. And that's between 177, 178, all the way down to 160. So this is going to be our optimal trade entry. If we get down there, really good chance that you could get a nice long position, especially for shares. If you want to go long and go heavy, you'd be looking for this range right here. Until there, we're just watching and seeing if price gets there. We're just playing the intraday stuff for the most part. Let's drop down to the 1 hour chart. On the 1 hour chart, again, we're on a Monday. Monday is, Friday we started our consolidation. Monday, we're consolidating further. Monday is typically our day of accumulation, right? Smart money is accumulating the position for the next move. Now, Tuesday, we'll be watching for manipulation, right? Our manipulation could just be a drop down to trend here, right? Break 230 briefly. It could be that we pop up, break 240, look like we're running higher. We'll be watching for the manipulation, but Tuesday is typically a manipulation day. And that manipulation can be right out of the gate. It could be all day long, but that's what we're looking for. And then on Wednesday, Thursday, we're looking for distribution. And so also something with the quarterly theory that we're watching, just because manipulation might be on a Tuesday, we're also looking to see high or low of the week coming in between Monday and Wednesday. So if we start heading up, but we don't take a high of the week or a low of the week on Tuesday, then we're looking for a new high or a new low to get set on Wednesday. Today, because it wasn't a deep day, we're not expecting that this was the high or low of the week. So now we're looking for higher or low on Tuesday or Wednesday. If we drop down to the 15-minute chart, the 15-minute chart is the last one I'm going to look at, and then I'm going to show you guys the silver bullet setup. There was a couple good trades in the silver bullet time macro, and so I'm going to show you those. But again, looking on the 15-minute chart, all we really saw today was, let's go to today's price. Okay, we ripped up, we came down, we took the low. We did not take liquidity down here. Okay, then we rallied up and we just kind of stayed inside of this range, right? Accumulating positions. Smart money is accumulating positions. Last thing I want to look at is like I said, the silver bullet setup. So I've been tracking this a lot lately. A lot of you guys have had questions and been very interested in this. A couple different things we want to notice, and I'll tell you the trades that I took. Okay, first thing we want to notice on leading into the silver bullet, we want to watch the London time frame, and that's going to be in pre-market. That's going to be between 4 o'clock and 5 o'clock New York time. Okay, we're going to be watching those levels, and we're going to see first price takes a high. That's irrelevant because it did not continue higher into high time frame liquidity. But then we're watching for price to trade and take high time frame liquidity. So what I saw leading into market open is that we came down here. Down here was a fair value gap. Let me see if it was on the 1 hour or the 15-minute. Let's check the 15-minute. Okay, so there was a fair value gap right here. Right there. So price came down before market opened, traded into this fair value gap, traded down to the low of this wick. There's liquidity there. Also to the low of, not to the low of that wick, just to the low of this wick, but I was watching this fair value gap. So now that we established that, I will draw it real quick so you can see it as we talk about this chart more. Okay. Oh, I got magnet on. Let's turn that off. Okay. So all I want to do is go to there. All right. So when we drop back to the 1 minute chart, let's get this so you guys can all see it. Okay. So when we're watching for our silver bullet, we're looking for consolidation. Consolidation is in London. Then we're looking for a price to show manipulation, right? So this was manipulation. And we trade down to liquidity on a high time frame. So this is 15-minute, right? Before we even get into the New York AM session. So that's one thing I'm looking for. Then I'm looking for price to run on London High. And that can be out of the gate, which happened today. It could be later, but we're looking for price to run to London High. So what I did is I used my standard deviation tool and I measured as we traded up and we came back down. We set a wick here, we set a wick here. I measured the distance between these two wicks with my standard deviation tool. And I say between 5 and 10 standard deviations is the target. Then we're also looking for price to run on London High. You can see London High in this dark black line here. Okay. And so what I did is after I measured that, I took the trade and then I let it run. I let it run up here and I didn't get a perfect exit because I was watching to see if we took London High. And when we traded up in this candle, came back down, and we traded up again and we didn't hit it as we came back down, that's where I sold my position. So that's the first trade I took. That was not even in the silver bullet time frame. That was just based on London Open, based on the fact that I saw price deliver into a high time frame point of interest, and then I saw these wicks set up and I was able to measure standard deviation. So that was first setup. Second setup, I did not take the trade. Come back down. We took this low. We set a fair value gap. That's a classic ICT setup. Okay. Displacement candle, took the low, traded back up into the fair value gap. That's going to be your entry. I'll mark it off for you so you can see it very clearly. That's your entry right there. However you can get it, but as we're trading back into that fair value gap, that's going to be your short. And then you're going to target a previous low. So then we'll come over here. We're going to see our previous low was right here. And you can see it overshot it by a little bit. So if you took that trade, congratulations. Your stop loss would have been back up here at an old high. Could have put it up in the order block as well, either one. But you're taking it in the fair value gap. And let's see what that would have been as far as a measurement goes. So it would have been a short trade. Stop loss at the old high. Okay. And it's a 2-to-1. Oftentimes these silver bullets are 2-to-1 setups. So pretty good risk reward on that. Hit it to perfection. Didn't even have much correction at all through that entire thing. Took it. Swiped the low. Stole the liquidity. Okay. And where I went long again, I actually went long early because what I was looking for was this low, high, and I was looking for a retracement. So I'll show you guys how I played that as well because many people might be interested in that. And there's no guarantee this is always going to work, but it's pretty effective. So what I'm going to show you here is where I went long. My initial long entry was inside right around here, pretty close to the optimal trade entry zone, which is where I try to grab positions. Now, when I called it out, I said you could take your stop loss down here at the old low. What I ended up doing was when we broke down and traded down into this order block here, I ended up averaging down, and I'll show you where I averaged down. I averaged down right around there after we took that low because what I was looking for was a continued run back up to that London high because we didn't take the London high. Now, what we didn't get was all the way back to London high. I took my position off early. I took my position off somewhere in there. I said we're leading into the New York AM or the lunchtime macro, where we sometimes can see reversals. We can see continuation of the existing, wave or structure, but we can also sometimes see reversals. Sometimes when we get the lunchtime reversal, we'll get a PM session that then reverses again. But anyways, heading into the lunch session, I don't necessarily trust that price is going to continue. Now, I had my eye on this fair value gap, which you can see that we traded, a little bit through it, but not by much. So you could have held the position a little bit longer, right? But we did trade up to it. So, I exited here. You could have held a little longer up to the fair value gap, but we didn't get back all the way to London high. So I'm glad I didn't hold that any longer. I got a nice exit. And because I had averaged in, I ended up getting about 17%, which was over $100 on 2 contracts. total. So those are the different ways that you could have played today's silver bullet. You could have played that initial silver bullet. That was an early one. Lately, we've been seeing them come a little bit more like 1030, 1040. This was an early silver bullet, and then you could have caught the reversal somewhere down here. You could have entered the optimal trade. You might have taken the stop, re-entered. That's up to you. I chose to average down, and then we ran it back up. Okay, I was definitely not looking when this came down and this rebounded with a couple nice candles off of this order block. That was a pretty good confirmation that we're not going lower today. And so, again, we got a nice rally. And then into the end of the day, we just kind of consolidated, sold off a little bit right into the close. So hopefully that silver bullet explanation has been helpful. I know there's a lot of traders that are following me that have been working on paper trading the silver bullet or learning how to trade the silver bullet. But you can see there's some really nice 2-to-1 setups that happen. Again, let's look at if we did take that long. Let's just say we got it in the optimal trade entry area. Oh, that's a short. Let's just check it to see what the RVR ended up being. So we got it in optimal trade. If you ran it back to the just to the fair value gap versus where the stop would have been, it's a 1.32. But since we averaged down, we probably got it, I don't know, somewhere in here. And so that 2-to-1 or that risk reward ends up being greater than 2. But again, if we look at where we closed, we got a 2-to-1 risk reward perfectly. So again, nice trades in those silver bullet timeframes. If you can get really proficient at it, I think you guys can definitely make some money. But I do recommend paper trading it for a little while, back testing it, checking out, learning more about how to use your fib tools, how to use standard deviation, how to use fair value gaps as a point of interest, how to use your high time frame liquidity to identify that initial run on liquidity, because those are all important. If you don't know those things, then you're not going to be able to successfully trade the silver bullet setups or those early morning setups. You may get lucky from time to time, but you're not going to efficiently know why it's doing what it's doing. So hopefully, again, that has been helpful. If this video has been good for you guys, don't forget to smash a like, subscribe, share with all your friends. It really helps get the Rawstocks name out there. As many of you know, we're a pretty new company. And then also, we're only about 100, 110, 115 new subscribers away from giving away some Rawstocks merchandise. So once we hit 500, be watching out for a video that explains how you can enter into the contest to get a free t-shirt or a free tank top. Again, see you guys on the next one. Good luck on your trading.